Warren Buffett often tells investors to buy when others are fearful, but what is his indicator telling us about the world right now? With the Dow edging closer to a death cross, beating off a 3-day losing streak, and of course seasonality coming, there's a lot to discuss from everybody's opinions in the markets right now. But possibly most important of all is, how does the market react at the most traded zone for the last 18 months? In previous times, we've seen squeezes in this descending channel. Will we do so again? Today, we'll talk about the breadth of the market right now, the lead indicators that are showing us what might happen next, and also what's going on with Tesla, straight through a psychological zone, and it might not be coming back anytime soon. Join us as we cover stocks, commodities, and cryptos together right now. Well, welcome back everyone to the Daily Show, where we talk about markets around the world, including the macro lead indicators and the hottest charts. If you like anything to do with markets, make sure to subscribe and of course, hit that alert button. Also put in the comments down below, what is your favorite stock right now? Let's talk Tesla for a second here. It was down while there was a sea of green across the board, and that's because there are concerns now about EV demand drying up. More importantly, Tesla broke through a key critical support zone that we'll talk about later on today's video. Fear and greed index, onto the main key indicators here, was up a little bit. We entered into fear from extreme fear, which could show us that maybe there are some recovery signs. But Q3 earnings beat data shows us that maybe the market's not really super hot right now. 70% beats at this stage, beat 617, misses 264. Well, that tends to be pretty much on average of what's happening. But if a stock is missing in this current earnings season, it's getting obliterated. So just remember, stocks have to meet expectations. Otherwise, they're getting hit, I think, for a factor of generally negative 6% on average during this earnings season so far. Bullish percent index is underneath 30, showing us that we need to be ultra conservative at this point because capitulation could be coming. But at the same time, we have to start looking for structural turnarounds, because generally when it's under 30, that's a good time to see potential buy the dip style situations, although I hate using that type of word. Let's talk about 15 corrections. That is negative 10% down from top to bottom. That's entered into for the S&P, it's entered into for the NASDAQ. What tends to happen next? We're the 1 week later at this stage. As I mentioned on the weekend video, 66.7% of the time we would be bullish over this week, but things get a lot more murky over the next month. And that's something that we will need to talk about. If you take every single correction since 1928, you obviously get a similar statistic on the 1 week, but 2, 3, and 1 month later are a little bit more on the positive side. Let's talk about this as well. I'm just going to read out a couple of things. Obviously, we've been talking a lot about transportation average and home builders recently. This is the S&P 500 and the NASDAQ and those two, and this is a 50 moving average. Now, you might say, why are you caring about this? Well, of course, all of them are underneath the 50-day moving average. And while that is a no-brainer, of course they are, what we're looking for is when a recovery happens, we want these two to be coming with that recovery. Remember, if a recovery starts to happen, it's looking good, and then these start turning down, and then the market hasn't rolled over yet, it is a cause for concern. We've been covering these for well over the last 2 months because, of course, it's been so important. Now, we mentioned Warren Buffett at the start of today's video, and that's because there is the legendary Buffett indicator. Now, in the original one, it was the US market cap versus the US GDP, but of course, we live in a global society. So what if we took global market cap versus global GDP to figure out whether it's cheap to buy the world right now? It's 97.68, and the average has been 88. So is it cheap? The answer is quite simply not yet. It's still a little bit expensive as an investor, though it's getting damn close to the right prices to get the average in. We'll talk more about that. Now, Walter over here has claimed that the day was 68% upside, which of course is correct. And that's telling us that the market is looking a little bit more positive, but not enough yet. We will be following the upvol over the next couple of sessions because we need to see whether this thrust looks real or whether it's more of a false rally. Also, another cause for concern has to be JGBs. This is the 10-year, basically Japanese bonds, and we're seeing them explode higher. Remember, we've talked about this chart on and off for the last 6 months, and we just hit that critical close to 1% figure. This is going to mean that we're having some kind of Bank of Japan intervention, and it's going to send shockwaves potentially through the carry trade. And we'll go more into that if it does start to happen. But treasuries could be in focus over the next couple of sessions. November market performance. What has happened since the 1950s? Well, it turns out that in pre-election years, it's often kind of all around. We sometimes drive a little bit higher over the first kind of half month, give up that drive, and then we end into a very strong period. The back of November into the start of December tends to be where the bulls come in a big way. So do remember, this is something we'll be watching very closely on the channel. We also know the October-November turn, which is the last 2 days of October to the first 2 days of November, when we have similar situations, has been very strong. 17 up to 1 down. Very strong statistics, and of course it started off very strong with a positive day one percentage, which we usually know is pretty good, 11 to 7. Then we go 10 to 8, so today, which is going to be the next day 2, which is maybe a little bit more negative, but then day 3 tends to be that really strong session. Will we get strong breadth thrust coming through on Wednesday of this week? Forward PE ratios hit 17. As we know, as an investor out there, you're going to like that, because 16.8 is the average forward PE over the last kind of 20 years. So really it's getting back into those fair points. And I've mentioned this one a few times, which is uninversion of yields and how we tend to actually see a bit of a rally from this point. We're very close now. I'll keep updating. Obviously, it's a different situation. Yes, I take your comments into consideration here. And I know a lot of people say, yeah, but usually the Fed is cutting when that happens, not actually raising rates. That is true. It's something to be considered about. We can also see here in terms of how many stocks, especially in the NASDAQ, above the 100-day simple moving average, so many falling down. Breadth across the board's bad. Only 14 stocks are above their 100-day moving average at this. Let's talk sentiment now. And of course, the bears were back in town last week in the sentiment reports. That's the type of thing that bulls want to see. As you would know, this is a bit of a contrarian indicator. We saw neutrality drop off and we saw bullishness drop off. If that continues and we see continuation in more bearish sentiment, and then we see market structure of an accumulation, that's going to be a good sign for the bulls overall. And of course, something we will be looking for into this potential seasonality process. What about XLP, considered often a defensive market sector? It hasn't really been super strong, but we've seen so much pessimism in staples. And as you can see here, when we get so much pessimism, 1 week, 2 weeks, 1 month, and 2 months, all the way up, tends to be a bit of a bullish signal. We also know that insiders started buying XLP recently. So we'll look at that on the charts later on today's video, and it's something we do need to be focused on right now because, of course, that's a pretty compelling stat. Do we see turns from the technical zone? This week's earnings is just kicking off, and there's some big ones still to come. We've got AMD after the close on Tuesday. Then, of course, PayPal, Roku, and AAPL. We've got the big ones with that, Square, Palantir, Shopify, and many, many others. A lot of hypergrowth stocks this week, and more importantly, just a lot of market capitalization. You can see here on this great chart how much spread there is and how broad the earnings are for this week. It really tells us a lot about the forward guidance for the American economy, and more importantly, it really kind of kicks off the end of the main earnings season. It's almost over as it just began, which tends to happen around this week into the next week. AMD is one of the biggest ones in terms of the move, plus minus 9.5% expectation, and PLTR is a plus minus, I think, 14 according to options markets. So just get ready for these hypergrowth stocks, guys. It's not a joke. These are huge moves, and the expected percentages are massive. For Bitcoin traders out there, we're still on track in terms of where we're at in halving tracker. We're starting to move up, which is traditionally what tends to happen at this time. We could see a sell-off into the start of next year, which is kind of what tends to happen. And of course, do remember your long-term stats. We are 1 year into the new positive signals. Now, it tends to be 1, 2, 3. I posted this over on our Twitter/X account, so make sure to follow along in the links in the description down below. But it's some great stats there from previous Bitcoin cycles. Speaking of cycles, we could be in a short squeeze that lasts for a little while for gold. We've seen similar periods such as down below, and obviously this was taken the other day. 1860 was the read here, but we expect gold to be quite strong. When we first reported it was 1860, now it is over 2K. So you can just see that gold is already in a big rally, and based on the fact that it could be in a huge accumulation here, It could even go a lot higher. I would expect gold to potentially reach an all-time high in 2024 and maybe even 2023. So I'm still very bullish on that metal. It's shiny and it's had its time of sitting there doing nothing for quite a long period. And we'll talk more about commodities actually later on today's video, because commodities could be in a super cycle, which is kind of exciting. What about unusual options or unusual trade volume? In this case, we got some unusual trade volume in the UVIX, or the VIX in itself. Basically, it's a 2x long leveraged ETF fund, and we've just seen some transactions going in suggesting there could be more volatility on the horizon. And remember, the VIX can go up if even stocks go up. So that's something to be on the lookout for. We also saw ProShares Ultra Qs come through with a big transaction, which could kind of show us that somebody is potentially accumulating a position around this price. It also could be a sell. We don't know yet, but at this point, it looks like it's more than likely a buy. Over to unusual trade options activity. Obviously, a lot of unusual trade going through Tesla. We continue to see huge amounts of Russell trade, still 2-to-1 on the bull puts. The puts versus, of course, the calls. And this is something that we've looked at a few times. Basically, the Russell 2000 is really heavily stacked in puts right now at these levels. This is also the bottom of a significant range on the weekly charts. Enphase Energy also in focus. This stock is just getting absolutely obliterated. Hopefully it finds some support soon. It's basically in what we call capitulation, and the squeeze, once it does turn, will be significant. The problem is trying to find the bottom. Be very careful in a stock like that. Have a look at Moderna possibly as something, as a signal as well of how bad things can get when things go down. Solar across the board, though, getting a lot of trade recently and a lot of interest in it because, of course, it's so far down. The overall options volume was really low, so not too significant. Compared to 39, we're only at 35, 50% calls and 50% puts. So not really a put stack day, not necessarily anything important just yet from the options market. Let's move over to rotation. We saw utilities over the last 5 days be the best sector, followed by metals. Loving metals right now. Iron ore in particular is something really interesting to me. We mentioned that in our Monday stream, so we talked about that a little bit. And then, of course, we've got a few defensives sitting through. What happened in the last 24 hours, though, could be more interesting. We started to see the rise of a couple of sectors. Communications came in 2% positive. We also saw banks across the board having some good sessions. Could it be a little bit of recovery? Some of the strongest sectors traditionally back down in the lows. Utilities only just put in the gain. It wasn't enough breadth though. So let's jump into the charts and look firstly here. Percentage of stocks above the 20-day moving average. Well, that increased. That was definitely a little bit better. Percentage above the 50, certainly down more in the dirt. Percentage above the 200, well, that was really, really low. And of course, we were looking at a point down here where you're just not seeing a market condition that's really giving us anything that says, oh, yes, this is absolutely the bottom right now. Of course, we want to see maybe capitulation would be great, which is a 16 on percentage of stocks above the 200-day moving average. So not too many huge moves there across those ones. What about yield inversion or uninversion? We're getting closer, but as many have pointed out, it's not the same as last time. So we'll look at that, but we'll be considering it along with many other factors. And of course, it is US 2-year / US 10-year if you want to have it on. We did see 63% upward volume across the board. It's not really a huge thrust of volume. So it's showing us that really we're not quite in, Wall Street's favorite. This is a real rally and things are looking really, really good just yet. We will be looking for one of those outlying days if it does occur. We also know that treasuries kind of sold off a little bit. Volume has remained very high here, but the main concern has to be those Japanese bond yields, because when we saw those going up the way they did, let's have a look here at JP 10-wise. And when you bring those up, look at this chart, almost to 1%. What a huge spike across the board. And that's going to have a huge impact to carry trades. It's going to have a huge impact to treasuries potentially. And it's a significant thing. Expect the Bank of Japan to potentially be intervening and moving all over it this week. And we know they've got an announcement and all sorts of things coming up. So that's a big deal. Copper hasn't been able to break the downward trend line. But notice that Dr. Copper, we're going to put the doctor in front of it today, hasn't really been weakening. It's actually been basing off. Now, this is a very important point for Dr. Copper. So we're looking for it to break out past this high now. I'm going to set an alert, which I think is going to be an important alert. to see whether we can get a point there at above 3.7. So if that happens, starting to look a lot better. Equal weight market, that was down across the board, but it did start to rally a little bit back up. We saw a big trade go through around 136 last week. So we're wondering whether there is a base here, and that was just like a knockout blow taking it through on the Friday. So we're looking for more breadth aggressively coming back in. We still don't have any injections from the major central banks either. So that's something we're looking for. We see these green line and this purple line go back up. Well, that's going to be a sign that maybe the markets are about to turn towards the bull side. Dow Jones Transportation Average is holding its lows, although it hasn't turned. It's obviously holding its lows. If we go down to something like a 2 hour, you can see here the first signs of a little bit of life in something that's been getting hit pretty hard. Home builders is pretty similar. It's right back down, but it did show some signs of recovery. I think, you're wanting to look at a price above 72 here for home builders. And again, this is something that we'll look at several times over the next couple of sessions, because if it gets above 72, that's a good first sign for recovery from what is technically a lead indicator. Let's talk about the dollar index. Are we still in neutral / potentially even bear territory? I would say the answer is quite simply yes. We are not sure whether this is distribution or accumulation just yet. It has signals in both ends. Of course, you see this low here still, which will have trapped some shorts into the dollar index, but we don't have kind of like a high still yet, or a UT as Wyckoff said it. But we knew that this would probably happen like this, and it would go neutral. So we remain neutral on the dollar index for now. And of course, yes, the trend is technically still up. What we're not neutral on is, of course, gold. Gold is much, much stronger, just trading under $2,000 an ounce. Many people are looking at this as a cup and handle, which is obviously here's the handle and the cup itself. And it is part of an accumulation strategy. Wyckoff, very similar style pattern. We're looking for a breach. Now, I think, again, a big significant closure on the weekly will just be getting above this closure here, 2027. If we get like a 2030, 2040, it could really be on for gold. And even though it's looked like it's squeezed and maybe there's a sell-off here that could come in, realistically, it's still making a series of higher highs and higher lows. So no change of trend to the downside yet on gold. And I still remain in the bullish camp for that for now. Gold stocks, they fell a little bit. We're down 1.47%. We're looking for a clear of $30 to really get things ramped back up here. But I wouldn't even mind it if it went like this. That would be absolutely fine. Basically an inverse head and shoulders at that point. Very, very strong stuff. I think gold stocks are super behind gold spot. So looking forward to that one. What about oil? Well, the world economy could be weakening according to oil, because we can see here it's come back down to the 82.50. No new low close. We have been going neutral bearish on oil recently, so we'll have to find out whether it can get below that point. But you can see here it's significant. You could set an alert for something like 86.36 as a bullish signal here for oil, because we know now that is a strong supply, because we reacted off it once, well, twice, 3 times really. So multiple reactions off that point. And of course, we've seen some selling coming through in that area. Let's move over here to Tesla. Now, everyone's talking about this because it's through 200. Now, 200 is a huge psychological level. A lot of retail traders love buying those rounds. It kind of looks like it wants to do more. Now, the good sign was it had a little wick at the end. Way too early to tell, but it's possible we're still going down to like a 180 down here, or maybe even lower. I've seen a lot of people now with sentiment of $80 to $100 for Tesla. Yeah, that's right. People are really negative on this stock. It's underneath the 200-day moving average. It's underneath many other key statistics. And of course, it's underneath its 61.8 golden pocket area. So this is an area where it would blow out a lot of people that were maybe trying to look longs and around this zone. It's blown out all the 200s. If we see a strong rally from this point, we know what's happened. It's tricked everybody. At this stage, though, too early to tell. I'd say the trend is still down on that one. Obviously, some significant concerns over EVs in the future as well, and how much popularity they're going to have, competition, et cetera, et cetera, et cetera. Let's move over to Apple. Looks like S&P 500 from the perspective of the downward trend here. And you can see it's kind of bought each time off this level. A lot of significance around this zone, obviously daily 200, moving average, et cetera, et cetera. We will be looking at Apple earnings this week. It's going to tell us a lot about sentiment moving forward. Now, I want to mention this one, which is metals and mining sectors. Let's talk about sectors for a second here. So metals and mining might look weak on paper, but I put this in our normal Monday show that we do for the open. And you can see here, I've just got here XME versus S&P 500. And over a long period of time, if you were to go out weekly and look at it for a long period of time, it's been ages since really metals have done better than the market. Is it time for them to do a little bit better? I think it could be, because when we tend to enter into commodity cycle, it actually lasts for around 7 years. And you could make an argument we're +3 or +2.5 or something like that right now in terms of where we are in the economic cycle of a new metals boom, or at least a commodities boom. So even regardless of inflation and everything, it could be that metals are just getting started, and there might even be a little bit more to come in the future. When we look over to the US 2000, what's going on there? Well, not that much at this stage. Obviously still down really low. The daily had a rally, failed to hold it. You can see here on the futures, it pushed right back down. When we take a look at IWM, which is the ETF, you can see again, just no bullish real thrust coming through on this market. Are we in the downward trend line? Absolutely. It's the same thing across most of these indices right now. I like the Russell though, so we will be looking at it. We've already talked about key levels in the previous video. Aussie 200, this is the Australian market. Any recovery here? No signs just yet. Looking at a 6,900 break up to really show us the bulls are back in town. Similar for the German market, no real signs of super strength on the low end timeframes. But if we do get past 14,960, that's going to be a huge deal, especially with this low still. People will like buying here with stops below there. It's going to work out a certain percentage of the time. But notice even this 50 moving average here. Look how many times it's held it below. Maybe even a significant breakout past 14.8 here could be big for the German market. I think it's only 1 point though. Qs, you can see this one's actually weaker than the rest. It broke down. It's come back and testing it from the bottom up. And when we take a look at the futures market, you'll see it's kind of like all over the place. Here is the support we're talking about. So support, support, support becomes resistance. We know there's supply in here. We can see it's reacting off that. Bulls want to get it through here so they can push back to 14,780-ish. And that's going to be the key level. But as always, we like to use the S&P 500. And this is the zone that has, well, at least me talking about it, and I'm sure all of us are now, Wall Street's favorite 18-month zone, a great structured demand block. I really like this level. Obviously, 41.50 to 41.20 was an area that we spoke about at great length here on the channel, and we've seen some buys. Now, did we get a little lower? Yeah, sure. We got 41.06 on the real market and 4100 on the futures, but there's so much going on here. We've got golden pocket. We've got green lines everywhere. We have, obviously, the descending channel here. And traditionally, what's happened around this descending channel, which everyone probably now sees, which is a bit of an issue whenever you see this, is that we actually get a rally from this point. So we sell off and we tend to see a rally to the top. Sell off, tend to see a rally to the top. We'll be looking for breadth, up vol, all of those types of things coming back into this market. Was there enough yet? No, there wasn't. The breadth was kind of weak. So because of that, we got to that point which you talked about on the Monday show, which was 41.50, 41.60, and we saw initially some sell-off when we saw some rally. Now we're seeing some sell-off again. We need to clear 41.80 to be happy and excited the bulls have really picked off this low. So I think a lot of people that bought down here would be saying, well, that's a pretty good profit target for us to initially scale out, break even, do whatever. We're not out of the sell-off just yet. We're still in an overall lower lows and lower highs. So just remember that. Lower lows and lower highs mean the trend is still down until it isn't. And we'll quickly update when that occurs. Speaking of upward trends, still Bitcoin is in a technical upward trend, making a series of higher highs and higher lows. It's in accumulation. Not much to say about this just yet. Look at Ethereum though as well across the board. Ethereum obviously trading to a key point, then coming down and breaking through this low. I guess for Ethereum, I'm in two minds. I can see both bearish cases and bullish cases for it. There's actually potentially two entries on the small timeframes there, which you could look at if you've done something like a day trading masterclass. Links in the description down below if you're interested in that type of thing. But effectively, there are trades, but they're all about getting the absolute perfect prices and then playing the break even, playing, of course, the correct asset management, which in this case was correct stop losses, correct take profits, etc. Because you can actually take a bullish and bearish position if you get the right zones. And then, of course, one usually works out, one might break even. That's generally what happens in these points of accumulation or distribution, and then we get huge moves. Now we have here Tuesday, October 31st, obviously Bank of Japan press conference, tentative, usually means it's coming just after this video. And then which we know is going to be big because of that JP10Y. And then, of course, employment cost index, and we have federal funds rate expected to be 5.5%. This is on top of earnings this week. FOMC statement, press conference, and then what else do we have? The jobs numbers coming out later on. So these are a big thing. This jobs number will show us a lot about the US economy. Make sure to be aware of it. 8:30 a.m. New York time. That is 1 hour before the market actually opens. And it is usually the biggest monthly news event other than CPI at the moment, which is always important. Thanks so much for watching. If you enjoyed today's video, then let us know in the comments down below and also by smashing that thumbs up button and hitting the alert button. We do this daily. So if you like anything to do with markets, remember, subscribe, smash the like button. We'll see you later, guys. Bye for now.